Welcome to The Business. I'm Rachel Pupazzoni. Coming up on the program, 9 out of 10 economists calling a rate cut, but why some business leaders say the RBA should hold its fire. And one woman's costly 7-year fight for compensation, how the system is stacked in favour of insurance.
You'll be okay with Allianz.
The Reserve Bank has been chalking up records. The main meeting of the board was the 33rd consecutive month with no change to rates, with official rates stuck on a historic low of 1.5%. But all that's tipped to change tomorrow, with markets betting on a 100% chance of a cut. It comes as the latest housing numbers show prices fell again in May, but the slide has slowed to its lowest rate in a year. Nationally, capital city prices were down 0.4%. Sydney was down 0.5% and Melbourne 0.33%. But Darwin and Perth are still in rapid decline, recording price drops of more than 1%. CoreLogic's Cameron Cusher agrees a 25 basis point cut is needed.
There's not too much to lose from cutting interest rates, and if it provides too much stimulus, it can be easily reversed. So I don't see any point in not cutting.
But CoreLogic says APRA's relaxation of lending rules will do more to stimulate the housing market than a rate cut. One business leader says the economic textbook may say cut, but the textbook is wrong in extreme circumstances. And former ASX chief Elmer Funke Kupper says we live in extreme times. Elmer Funke Kupper, 9 out of 10 economists are calling a 25 basis point cut tomorrow. A lot of them got it wrong in May though, so what are the chances the bank won't cut?
I'd say there's a fair chance that they will cut. And the reason I say that is that the RBA governor has essentially flagged that they're seriously considering it, and experience says that if they do that, they probably will cut.
Now, you've been saying a cut isn't necessary. Why?
Well, I think there's a couple of reasons for it. The first is that a rate cut won't fundamentally change the way the economy works. When rates are already this low, it is unlikely to stimulate business investment, where access to credit is now much more important than rates. And it's only going to give temporary relief to people who have a loan today, such as a home loan. Much more effective ways to stimulate the economy are things like tax cuts, increases in the minimum wage, and so forth.
Westpac thinks there'll be 3 cuts this year, JP Morgan predicting 4 in the next 12 months. These are pretty bold predictions, but you're saying it's not necessary. But there does seem to be a tide of opinion that we need at least 50 basis points cut to have any impact. Do you agree bigger cuts would be better?
No, I don't. Reducing rates makes sense according to the textbook. I think where the textbooks fall short is when you have an extreme environment. We have an extreme environment where interest rates are at historical lows and monetary easing has been at historical highs around the world. And in that environment, the effectiveness of rate cuts relative to other things you could do is simply not going to be particularly high.
A lot of people, though, would welcome surely an interest rate that would give them more cash in their wallets.
Well, of course they would. And I'm not denying that. The question is from an economic growth perspective, is it the best way to do it? For example, the rate cuts that are planned by the Morrison government are worth about 2 rate cuts. And of course, they're enduring because they start to improve the way businesses can plan long-term for their investments. It's a much more effective way to go about it than a rate cut per se. I'm not saying it won't help or do nothing. I'm saying it's unlikely to give the effect that people are looking for and that the economists think they will get, particularly in inflation, when there are other more effective measures. On top of that, there are some downsides that I think we shouldn't underestimate.
What are those downsides?
Well, I think the downsides is that stimulating people to borrow more at a time that they're already heavily indebted, I don't think is particularly smart, because one day interest rates will go back up and it will significantly increase the stress we put on households when it comes to paying their interest rate bills. I don't think that's smart. Another downside is older Australians who live off their savings, who will now face 0 or negative real rates of return. That pushes them to cut consumption or to go into higher risk investments, both of which are not particularly helpful.
We've just had the coalition returned. Within a day, there were cheers from the stock and property markets, but there have been constant warnings that we are facing low growth for years to come. You've obviously indicated what impact tax cuts would have. So is the responsibility here with government to kickstart our economy?
Ultimately, the only thing that's going to create growth is a more productive and more competitive economy. And there's a direct relationship between productivity, earnings growth, and wage growth. And so that's the engine that we need to get going. And the truth is, we've had probably a decade or so worth of, if I can use a blunt word, political nonsense, where states and federal governments have been working together, a lot of change in leadership. We hope we can put that behind us so we can work on both the short-term improvements, such as tax cuts, which are very, very helpful, particularly business tax cuts, as well as some of the longer-term reforms that make our economy more productive. Workplace reform, tax reform, fixing the energy and environment agenda, which is desperately needed. Those things will take 10 years to put in place. So in the short term, we can do some things around tax, and things like the wage decision that we saw last week from the Fair Work Commission. But there's no excuse for getting on with the longer-term reform agenda that will ultimately translate into a more competitive and productive economy, much more valuable than pulling the interest rate lever in the short term.
Elmer, Funke, Kupper, thanks for speaking to The Business.
Pleasure.
US President Donald Trump has downplayed claims he was set to slap tariffs on Australia last week. There are reports the president's top trade advisors recommended the introduction of tariffs to offset a surge in imports of Australian aluminium. Australia was one of the few US allies excluded from steel tariffs it imposed on the EU, Canada and Mexico last year.
Well, we have an arrangement with the United States, and we are working within that arrangement and working closely with the US officials and the White House on all of those issues.
The Prime Minister says he's confident Australia's trade with the US will remain tariff-free. Well, to the markets, which were rattled by the talk of tariffs. Both the All Ordinaries and the ASX 200 were down by more than 1.2%. And the Aussie dollar is on a bounce ahead of the RBA decision tomorrow. I spoke to Kyle Rodder from IG to kick off the week on markets. Kyle, markets kicked off the month on a down note. Which were the worst affected sectors?
Yeah, it was really the commodity-exposed sectors of the market that performed worst today, and that was really on the back of some of the fears around trade wars, global economic growth, and a lot of that was triggered by Friday's news of tariffs from the Trump administration on Mexico. So there's a really big concern about global growth at the moment. As a result, that really weighed on the energy sector today and the materials sector as well.
Now, we got some data out of China. What does that show?
Well, it was a little bit better than expected. These were sort of the more unofficial PMI manufacturing numbers today, and it came in a little stronger than forecast. So it was at a 50.2 reading versus a 50 reading, and anytime it's above 50, that's considered an expansionary print. So it was slightly better than expected. It must be said that it was actually a bad thing for Chinese stocks because it meant the potential for less fiscal stimulus and monetary stimulus, but it was good for areas of our economy, and it was slightly good for the Australian dollar too.
Now, of course, we're on the eve of a highly anticipated interest rate cut tomorrow. How is the market preparing for that?
Well, 25 basis points of those cuts are already priced in, so at least in the minds of traders, tomorrow's meeting is a mere formality. Now, the biggest move would obviously be if that doesn't materialise and everything would have to be repriced again. But assuming that we do get those 25 basis points of cuts, which is being widely expected, it's going to be really looking around what that statement says that the RBA releases as well, just to indicate whether there'll be another cut coming anytime soon and for what reasons might that cut arrive.
The Aussie dollar has been enjoying a little recovery. Can we expect that to be pulled back tomorrow?
Well, it might be a bit of a funny one tomorrow because, like I said, most of those cuts are being priced into the market. So you might even see the Aussie dollar get a little bit of a lift if the RBA aren't as so-called dovish as we expected. Really, the Aussie dollar has seen something of a reprieve recently because the US dollar's actually come off a little bit since this news around the Mexican tariffs last week. So in the short term, there's even a bit of a chance you might see a pop from this RBA meeting, depending on the commentary. But it must be said, with interest rate expectations like they are, the pressure remains to the downside for the Australian dollar.
Kyle Rodder, thank you.
Thank you.
Insurance companies sell policies with the promise of peace of mind for customers. But for many people, trying to make a claim leads to the very opposite. Andrew Robertson has been investigating the case of an elite sportswoman who was severely injured in a car crash, which was not her fault. 7 years later, she's still fighting for compensation.
Just up here's where it happened. I was stopped in traffic and this van hit me from behind into that middle lane.
For physiotherapist Joanna Boyce, the 8th of June 2012 was the day that changed her life.
Go Joe!
From top-level soccer player
How do you like your coffee?
to struggling to walk after suffering serious injuries to her pelvis and bladder.
It shrunk our life considerably. I haven't been out of work. I've tried to do some volunteer stuff and get back to things, but I just don't have the capacity.
So what happens when you try to sit up straight?
I almost subconsciously move now anyway, but the pain builds up pretty quickly. So I can do it for very short periods, but the pain just gets worse.
7 years on, Joanna Boyce is still waiting for compensation for her injuries. The third-party insurer for the other vehicle was Allianz.
You'll be okay with Allianz.
But for Joanna Boyce, 7 years on, it's not okay.
For the individual who just wants their case over, they suddenly find themselves caught in this vortex of endless legal arguments over their entitlements. We've tried to simplify the system. There's been efforts to streamline it, and they've not been an entire success.
As an insurance law and personal injury specialist, Andrew Stone has seen the good and the bad.
Some people get a rails run through the system with the insurer being cooperative and easy to get along with. Other people, for whatever reason, whether it's the insurer doesn't like the look of the claim or doesn't like aspects of the claim, they can have a horrific time that gets them caught up in the system for years.
Go on, Luncheon.
In Joanna Boyce's case, Allianz is rejecting her claim of more than 10% impairment, a threshold which would allow compensation for pain and suffering. It's a battle in which she's incurred hundreds of thousands of dollars in legal costs, and when added to her medical expenses, she says it's nearly $1 million.
I think they just find that if they keep pushing, people give in because you can't keep fighting forever.
One of the problems with the system which tips the scales in favour of the insurers is that the claims process is not regarded as a financial service under the Corporations Act. That means the consumer protections under the Act don't apply, leaving people like Joanna Boyce to fend for themselves.
Insurance companies are not publicly accountable. They're not necessarily publicly transparent.
As a man who earns his living helping disgruntled customers fight insurance companies, Cole Fulliger says an online ratings comparison site for insurance would force the industry to lift its game.
Where the individual, the member of the public, the advisor, the journalist, has the opportunity to rate the insurance company in particular areas, then there'll be public accountability and transparency.
Contributing to Joanna Boyce's plight is the search for the medical opinion that will win the day. She says she was forced to see 15 doctors in 1 year, including an independent government-appointed doctor who found in her favour. Despite that, the insurer rejected it.
As per usual, I think Allianz has a habit of appealing absolutely everything that's possibly in my favour.
Allianz has told the ABC it has great sympathy for Joanna Boyce and has made 3 offers to settle the case, the latest for $1.5 million. However, faced with the prospect of never working again and the costs she's already incurred, Joanna Boyce says it nowhere near covers the losses she suffered.
If I didn't have my family and a husband who can work and things, I don't know where we'd be. Like, we couldn't still be in this fight. We would have had to give up.
Joanna Boyce says she just wants a fair settlement and her 7-year nightmare to end, an end that is still nowhere in sight.
Andrew Robertson there. And that's all from the business. I'm Rachel Pupazzoni. Good night.